Booming commodity prices driving the Canadian dollar to its highest point since 2017. Depending on the day, we seem to be hitting levels not seen in several years. Also, the Bank of Canada's perspectives have been factoring into this. Let's get some more on the outlook for the loonie. Adam Button is Chief Currency Analyst with Forex Live, and he joins us with more details. Adam, nice to have you with us. So let's just start from your standpoint on what have been the key driving factors for the loonie.
Yeah, if we back it up, why has the Canadian dollar been the strongest performer this year in the whole world? And we're at the start of the cycle, right? Everybody knows we're coming out of the bottom. Commodities have absolutely boomed. And you have so much stimulus in Canada and in the world. All the spending in the U.S., that spills across the border. And it's everywhere. So that's, filtered back into this idea that we're going to see growth upwards of 6% this year. And every data point that comes in is stronger than expected.
And how have you felt in seeing the reaction in the currency to those data points? I mean, do you think it's a justified move?
Yeah, well, it really started out with a lot of disbelief, and I think we still see a lot of that. Even if you go back a month ago, after the Bank of Canada, that started to shift it, but if we see speculators in the market, they weren't really long Canadian dollar until the last couple weeks. And if you look at all the bank targets, they're all above or sort of below where we are right now. So there's that disbelief now, and we're just starting to see that change. We're starting to see some bids come into the Canadian dollar on the speculative side. We're starting to see or talk about a higher Canadian dollar. And so that oftentimes is fuel for a longer-term Canadian dollar rally when you take those skeptics and you turn them into believers. And I think we're in that process right now.
I'm curious about that speculative factor. Can you quantify that for us? And what is it those speculators are looking to ultimately do?
Yeah, well, so each week there's no data in the FX market. It's a big, open, unregulated market, but there are futures trades in the Canadian dollar. And those were about flat a few weeks ago. And just in the last 3 weeks, we've seen a real push in the Canadian dollar. And so the CFTC reports those after Dodd-Frank. And suddenly the Canadian dollar is the darling there. And oftentimes those are very strong hands, and it's lasting, and you see that sort of move. And it's not really at stretched levels yet, so we're really in that sweet spot where you start to see kind of strong hands come in. And it's interesting on the corporate side as well. If you talk to dealers, corporates love holding U.S. dollars. They're the strongest hands out there. They never believe, these are Canadian corporates, never believe in the Canadian dollar. But now you're starting to see this talk about hedging. We're at the 120 level when you flip it around, or 83 cents. They start to see these headlines, okay, 6-year high, start of the economic cycle, all of the things I'm talking about. And they say, you know what, we don't want to get caught out here. And then you can start to see some pretty quick moves in the Canadian dollar. We talk about those long-term moves, and you see, sharp drop in the Canadian dollar on the pandemic, or in the global financial crisis, or in the oil collapse a few years ago. But what people don't talk about a lot is the Canadian dollar can move quickly to the upside as well. And a lot of that is going from that disbelief to belief. If we come out of the financial crisis, there was a 25-cent move in the Canadian dollar in a year. And, we're about halfway through that right now if we were to match that going forward.
Well, to tie it, let's say, to the world of commodities, I think a lot of people think 2015 weren't oil price. Last time I think we were basically 85-cent U.S. Canadian dollar. You look at oil prices, we're pretty much bang on where we were back then.
Yeah, but you look at the next leg, right? So we've seen all commodity markets really explode. And I think oil is the linchpin now for the next level. We're at a really sticky level in the Canadian dollar right now. We've seen the turn in the Bank of Canada. And oil is kind of the thing that we need to see $70, $80 to get the Canadian dollar really cooking. And now we're going to have Iran headlines this week, OPEC headlines next week. And if oil can get going, like a lot of the other commodities, we're going to see, I think, the Canadian dollar really take off. But that's really the spot to watch right now.
And explain why it is that you can see such quick moves. What happens in the trading dynamics that if it were to take off and you were to see a further spike, why you can see such a quick move?
Yeah, well, a lot of it is just that money flowing, right? And then you see hedging, and you see the mechanics of hedging where you say, listen, I'm happy to have U.S. dollars, and then the corporate it builds up on the balance sheet of corporates, and then they say, you know what, I need to have more Canadian dollars here. I need to have more Canadian exposure. And then on the flip side, when commodities hit certain pressure points, I mean, we talk about oil again, you see those investment flows come in. So right now, $65 oil, everybody's saying, let's just hang on to our money, pay down debt. But when you get $70, $80 oil, you say, you know what, let's spend $2 billion and build a new oil sands project. Or you start to see some M&A come in, and then you get those very fast flows or that upfront spending, and that shakes the Bank of Canada and really gets the currency moving as well. So I think we will need to see a bit higher commodity prices, or at least sustain commodity prices, to get the belief that these prices are for real.
Adam, thanks a lot. Adam Button, Chief Currency Analyst at Forex Live, with his outlook for the loonie